Hello, good evening, everyone. Good to see everyone over here. My name is Alex from MarketWise Asia. Today it is the 17th of March, 2023. As usual, it is a Friday evening. So if you guys can hear me loud and clear, please say a hi to me in the comments or in the chat box. This live streaming is broadcasted to both Facebook and also on YouTube as well. So please say hi to me in the comments or in the chat. Give me a like, share, or comment to engage with me. Okay. So the night it is still young. Oh, by the way, right? So there's the daylight saving. So right now the US market actually opened at Singapore time 9:30 p.m. So right now, as of now, 11:30, the market has already been open for 2 hours already. So today, market is not too good. Okay, market is down again. Okay, this is pretty expected. Later I will show you why. So please give me a like, share, comment. Let me take a look at the comments right now. Hello, Wei Lun. Hello, Dave, Mary, Yalam, Team Lee. Hi, please calm our nerve tonight, team. Okay. Yeah, price action is not looking good. So I'll be trying to be as objective as possible. Okay, so we'll go through some of my outlook and my sharing later. Okay. Hello, CA. Hello, Vincent, CJ, Mark, William, Adeline, Kok Leong, Tarun, Alvin, Pei Wen, Forrest. Okay. Philo, Christina, Yu Yang, David. Okay. Kate Wing. Yes, today is the Happy Witching Day. So today it is actually the OPEX expiry day. Okay, so there's a lot of options expiry. Okay, expiring today. Okay, market is volatile. Okay, Angus, Xiang Lun. All right, so let me take a look at the comments once again. Okay, so yeah, let's kickstart this session right now. So today I'm also actually out pretty much the whole day. So since my last week, okay, so I'm out pretty much the whole day and just came back not too long ago and watching the market and such. Okay, and so still pretty light on the positions right now. So let's head over to my screen share right now. Okay, so as usual, a disclaimer first. Whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. So Alex could be wrong. So please do your own due diligence. It's not meant to be a financial advice. Okay, so please do your own due diligence. All right. Hello, MH, Denise, Dominic. All right, good to see everyone of you here. Stephen, Ted. Okay, so before I kickstart this session, once again, just want to remind you all to subscribe and follow on all our social media sharing, especially on Telegram channel, YouTube, and also on Twitter as well. So I'll post this social media link on the comments and also in the chat box. So once again, Telegram channel, I think many of you here are inside, okay? So Telegram channel is a place where I share, of course, my latest updates, price mover, okay, morning wrap, okay, some of my analysis and thought process also in the Telegram channel also, okay, and of course YouTube channel. Sometimes if I miss my Facebook Live, I want to do a video, I'll post on YouTube channel. So please do subscribe to our YouTube channel. Twitter, nowadays I posted a lot more things on Twitter. So my trade ideas, my sharing, my thoughts process also on Twitter as well. So please subscribe and follow on my social media channels. Okay, and also, okay, Asia Trading Festival that is coming up pretty soon. Okay, I mean that not so soon as in like next week or so, but really soon. Okay, in April. Okay, so this is the Asia Trading Festival. We kind of sort of finalized the speakers already. So let me go through this link for you. So this is the Asia Trading Festival. I'll post the link in the comments also. Asia Trading Festival. Okay. All right. So this is okay. So this is the Asia Trading Festival. So the sponsor for this event is actually ACAP, one of the regulated broker in Australia. And now we have finalized some of the speakers. Okay. So we have Michael Covell, okay, the author of the very popular book Trend Following, and with Ray Barros coming back again, you know, Boris Schlossberg, Kathy Lin. Okay, we do have some of our new speakers as well. This banner show Rusmin from fifth person, but actually it's Victor. So Victor from fifth person also is coming to speak. Also, this is a new speaker. Okay, and yeah, looking forward to his sharing also. And some of the resident speakers like Jay, all right, Jay, Alvin, I think didn't really speak for a few sessions already. So Alvin and James Yeo from Small Cap Asia and speaking as well. Beanie will be back again. And the other one, okay, I think, you know, I invited Spot Gamma for those who are interested in option. Okay, so actually I've been following their tweets, okay, and content on Twitter as well. So I think they have very good, you know, content and information on options, especially, okay, if you guys realize that nowadays options kind of really influence the underlying stocks movement right now, because so a lot more people are trading options nowadays. Okay, so Spot Gamer, you can see that they have, you know, 89.6k followers. Okay, one of their founders, Brand Kochu, I think Kochuma, okay, will be speaking at the event as well. So I think you guys don't want to miss this session by Brand. A lot of content also. So Spot Gamma, this is their website over here, Spot Gamma. Okay, so yeah, so yeah, Brand Kochuba over here, right? Is one of the founder of Spot Gamma. He'll be speaking at the at the Asia Trading Festival. So as one of the new speakers for this event as well. So do register for this event. I'll post the link in the comments once again. So as usual, right? If you pre-register interest now, you'll receive some exclusive bonus materials and reports once they are ready. So once you register for this event, just enter your name, email address, and mobile, and you are good to go. You won't get a confirmation email, but we will receive it. So once nearer to the event date, okay, we will send you the bonus material. It is not ready yet, okay? Don't kanjiong, okay? Don't kanjiong. Once it's ready, we will send you the materials. Okay, so if you have forgotten whether you have, you know, registered, just register once again. Okay, so let's get ahead for this session right now. So how many of you once again are very worried about the market right now? So just again want to do a consensus, maybe until the end of the month, March. Okay, until the end of the month, March. This is the S&P 500. Okay, 500 over here. Okay, do you think the market will go higher by the end of March or go lower by the end of March? Do you think the market will go up or down by the end of March? Okay, so can just comment in the chat box or comments up or down. Okay, just let me know your thoughts. Okay, your sharing on the comments. Is it going to up or down by the end of March? Christina say up. Mark say up and away. You hang. Sharon, Cheng saying up, down. So up. Jolene also say up. Wow, so many of you say up. Sure or not? People also say up. Why are you guys up? Are you guys kind of influenced by me, by my sharing on Twitter? Is it okay? But I think a lot of people should be bearish today, correct or not? Okay, CJ say sideways, team say don't know. Actually, there are still some of you, maybe 30 to 40% say down. Okay. Actually, right now, if I'm not mistaken, okay, the sentiment on Twitter right now is actually very bearish right now. Very bearish right now. So yeah, a lot of people are expecting worse things to come, but that what makes me a little bit more bullish. Again, this is just my personal, you know, sentiment of the market. Okay, let's go through that later. Okay, so of course, you know, the headlines that have been captivating the whole, you know, the market is actually the banks collapse, okay, by the Silicon Valley Bank, SVB, and also the Signature Bank. So by now, you should know that these two banks has actually collapsed. Okay, of course, you know, the Federal Reserve has already come out and say that, there won't be a bailout. Okay, it is technically not a bailout, but the depositor will be made whole, which means that all the people who deposit money into this bank, okay, they are guaranteed, okay, nothing to fear that, they can't get back the money. So it is guaranteed that they will get back the money. But, all right, the shareholders and the bonds holders, are basically the debt holders, will not be protected. So it's the kind of 自己保重 So, okay, I won't protect you. Okay, the share, crash, whatever it is, you won't get anything. Okay, but the depositors will be protected. So once again, of course, is the fear overblown out of control? Okay, what do you think? Do you think that this collapse of the bank will lead to a contagion? Okay, or it'll be controlled? Okay, if you think it is gonna be controlled, you can just type type control, all right, in the comments, or see it can be controlled. Okay, or you think it's going to get worse because of this bank collapse condition and spread to the rest of the other banks, and the market is going to be worse, that kind. Okay, there's no right or wrong. Okay, just want to share with me your thoughts also. Okay, so I want to share with you, right? Okay, my personal opinion. By the way, my personal opinion doesn't mean that it's going to be correct. Okay, I could be wrong. All right, mine is a very kind of simplistic overview of the market and what I've gone through for the past 12 years, 13 years in the market. Okay, some are say some going to get worse, some is under control. Okay, so there's a difference. Okay, this is a financial crisis. Okay, this is a financial crisis. Okay, this is a financial crisis. No doubt, this is a financial crisis. FINANCIAL. Okay, financial crisis. Okay, but there's a difference between the 2008 and also the crisis right now, in the banking crisis. So you need to understand that the 2008 global financial crisis is actually a credit crisis. Okay, right now the banking collapse is a different kind of crisis. Right now it's actually a liquidity crisis. Okay, what do I mean by credit crisis? Basically, somebody defaulted. Okay, default. There's a default. Okay, meaning that people cannot pay their money and such. Okay, so they default their payment. So this is a credit crisis. So I'm not sure how many of you actually remember. I think most of you guys are in the 30s to 40s to 50 in age lah. So you should remember what happened in 2008, even though you might not participate in the 2008 financial crisis. Maybe you're not in the market or what. Okay, so 2008 financial crisis is actually caused by the subprime. Basically, the banks, okay, lend money to the not so good people that has a poor credit rating, and allow them, okay, to buy houses, real estate and such. Of course, when the real estate industry doesn't do well in 2006 and 2007, okay, that is the time when these people who has the mortgage cannot make the mortgage repayment, and that's why the bank get less money. They can't get the money back, and all in all, it lead to some distrust between the banks. Okay, and banks don't want to lend to each other. That's where the crisis started. So this is a credit crisis. Okay, of course, the mortgage-backed securities, the banks repackage all these mortgage into this MBS thing, mortgage-backed securities, and resell to the investors, and this caused the MBS to lose a lot of value, and this spiral all the way down. Okay, so this is a credit crisis. But 2003, right? Okay, as in 2023 now, it's a liquidity crisis. Okay, there's nothing wrong with the bank. Okay, the bank didn't lend money to the bad credit rating people. Okay, it is just that because of the hiking of the interest rate too fast, and because the SVB, they put majority of their money into long-term treasury bonds. Okay, once the interest rate hit hike higher, the startup, they wanted, to withdraw the money and such, right? Okay, they cost the money to do a bank run. You get what I'm trying to say? So once people withdraw all the money, okay, the SVB and the signature bank has no choice, but to sell away their treasury bonds, okay, to get the money back, to return back to the depositor. So too much people withdraw. Okay, that's the crisis. Okay, liquidity crisis. I hope you guys understand what I'm trying to say. Okay, I'm not sure. How many of you actually recall? Okay, the 2011 euro debt crisis. How many of you actually can remember the 2011 euro debt crisis? And you are involved in the market during 2011. Just type me in the comments, okay, or 2011 if you are already involved in the market in 2011. Okay, any of you here? All right. So I just want to compare these two things to you guys: the 2011 and the 2023 right now, the liquidity crisis of the banking crisis right now. Okay, how many of you? Okay, I think some of you might lah. Okay, I'm again, I'm not sure how many of you, but 2011 is actually the year where I started to dip my toes into the financial market. Okay, I first started to invest in the market. I wasn't involved in trading. I was still a newbie. The first year, 2011, I am in the market. Okay, so my idea at the time was very simple. I just wanted to invest some of my extra capital that I have, to hold for a period of time. By the time 2011 comes, right? Okay, I input some money. I think in April 2011. Suddenly then the crisis came. Okay, this euro debt crisis caused by these PIGS. Okay, PIGS is Portugal, Italy, Greece, Spain. All this euro debt crisis at that point in time. Okay, I don't know how many of you can remember. Okay, this was a very, very big deal. Okay, it caused a lot of fear in the market. Okay, don't ask me why the euro debt crisis can cause a correction or a crash in the US stock market as well. So this was a very, very big thing. Okay, every single day for many months. Okay, the newspaper just kept talking about the euro debt crisis. It's going to be a very bad crisis. There's more downside to come. Maybe right now you can't feel the sentiment. But for me, okay, because that was the first year I invested money, 2011, I put the money inside of the Singapore stocks. Okay, then the euro debt crisis came. Okay, and then my mentor, okay, at that point in time, he said, hey, the person who taught me about value investing, okay, he said that there'll be more crises to come. Another crash is coming. That made me very fearful. So all in all, after I invested my first sum of money in the stock market, okay, then after not too long after, I sold all my portfolio. I think I all in all, I think I suffered a loss about 20 to 30% capital loss. Okay, my drawdown. So that was how bad it is. As a newbie, I know nothing. All these are causing a lot of fear in the market. Okay, again, so PIGS all this euro debt crisis thing. Okay, and again, I'm not sure how many of you actually can remember during that period of time. In the 2010s. Okay, 2010s. Okay, there's this very famous guy. Okay, from gentleman from Taiwan. He's called Hu Liyang. Okay. At that point in time, he always come to Singapore to give talks. At the time, physical event was still very popular. I also attended a lot of these physical events, investing events. So there's this analogy by Hu Liyang. He also known as the 亚洲股市教父啦. Okay, basically the Asia, stock godfather. to briefly translate into Chinese. Okay, I remember very clearly. He gave a very simple analogy. Okay, an analogy. So he said that this euro debt crisis right now, you might feel very fearful. Okay, but actually it is just like a mosquito, 蚊子, mosquito, the one that bite your skin. Okay, that sting on your skin. Okay, it is very irritating, okay? But it doesn't kill you. It doesn't kill you. It doesn't kill you. It doesn't kill you. So every day, let's say, for example, you are sleeping and the mosquito is in the room, okay? It is just very annoying, okay? If you don't get rid of the mosquito, it will just keep buzzing, keep biting you, but it doesn't kill you, okay? So he used it as the analogy like the Euro debt crisis, okay? To him, the Euro debt crisis is nothing, okay? It's nothing. You get resolved eventually. You get resolved eventually, okay? But it is a very irritating kind of event. Every day the market, wow, fearful down. After that, have some hope rebound again, down, up, ping pong, ping pong, ping pong, ping pong. But eventually, the market recover and head higher again. So, at that point in time, there are people doubting him. I'm also doubting him also. Are you sure? No, my mentor said that, the market is going to get worse and everything is going to collapse, that kind of thing. Okay. But I said that, 哎呀，不用担心，像蚊子一样的 okay, 很 irritating 东西 irritating. I mean, he didn't say irritating now, okay? He just said that, it doesn't kill you, it is just irritating, but after a while, it just go away. Okay, so at this point in time, I have the same feeling for this 2023 liquidity crisis also. It is just like a mosquito buzzing you, today, there's this banking crisis, tomorrow it get better, then again, Credit Suisse, the event came again, everything is just, every day is like ping pong, ping pong, ping pong, very irritating, but to me, it's that you get resolved eventually. So let's head over to this, 2011. So how many of you actually can go? Let's go back to 2011 over here. 2011, it is actually, somewhere around here. Okay, 2011. So 2011 is here. 2011 is here. Okay, can you see that, the drawdown from the top to the bottom is actually more than 20%. It is actually 22%. Not by any terms are not a weak correction. It's quite a market crash. It crashed 22%. Okay, so as I mentioned, right, I think I invested in April. Okay, after that, subsequently, market just crashed down all the way here. Okay, so at the point in time, now you on hindsight, you see that hey, nothing. After that, the market just rallied back. Okay, but at that point in time, it was a very, very big event. Every now and then, the newspaper will say about this thing, and it is not an easy environment to trade. You can see that, after that, it had a very strong impulse correction down. Okay, then the market just ping pong all the way. Okay, for about how many months? August to November, ping pong for about 3 months. Ping pong. Eventually, get resolved. Okay. Can share who is your mentor? My mentor is actually Dennis Ng. Dennis Ng. He actually passed away in 2012. Okay, 2012. So Dennis Ng. All right, Dennis Ng. Okay, so yeah, so it was scary at that point in time. So back to this thing right now. So I feel that why is it a small issue? Okay, you need to understand that this is not the first bank to collapse, and definitely not the first bank run. Overall, in the history, okay, there are a number of banks who bank run, okay, collapse, okay, and I'm show you this thing. I think Yahoo Finance give a good infographic on the bank run over here. So you guys can see the chart over here, right? So this is from Yahoo Finance, okay. Silicon Valley Bank, SVB, and Signature Bank is ranking number second and third. But Washington Mutual, I think of a very big bank in 2008, also collapsed. At that point in time, it is actually near to 500 billion. But the thing is, it didn't take into account into inflation. Okay, it didn't take into account of inflation. So by now, okay, the Silicon Valley Bank, SVB, might have overtaken Washington Mutual if we put considering into the inflation. So it is definitely not the first bank failure. There's already, history of it already, okay? You understand what I'm trying to say? Okay? And there is already a playbook for such financial crisis. Okay, this is not the first kind of bank run or the first collapse. So we have history to guide us how to go about it. And okay, the Fed will always be the lender of the last resort. They came out and said that, hey, I'm going to provide liquidity to the market, all the things will be guaranteed and such. Okay, once again, to me, is that again, people ask me, hey, where does the money come from? It's not from taxpayer. My job is to not to question where the money comes from. Okay, don't need to question that. Okay, they say have means have. It is not my main priority to know where the money comes from. It is about the confidence that the Fed will give the market. Okay, and they say that it's not a bailout. Of course, technically, you can say it is a bailout, but it is not a bailout because shareholders and debt holders are not protected. So there's already a playbook already. Okay, and at the end of the day, the Federal Reserve, can just print money, whatever it is. You need to understand that they have the power to print money, because they are the reserve currency in the world. Okay, they can do some financial engineering and such, okay. All right. So yeah, that's my personal opinion. All right. Again, if you understand what I'm trying to say, just type the letter U again in the comment. All right. Understand? Just to type understand the comments. Again, you might not agree with me. I think that's fine. But personally, I think that the market on this banking crisis, right, will resolve eventually. But it might take some time. So the market at this point in time, okay, can just ping pong for a while. Okay, it might wear you out. Okay, it might wear you out. Okay, so if the market correction doesn't do in an impulse move, okay, it might wear you out. Just do sideways for a period of time, okay, until you feel very tired. By the time give up already, the market just hit higher. Okay, all right. So this is my personal opinion of the market. So it will get resolved eventually. Okay, so let's head over to the current economic data that's coming up right next week. So the market is going to be again, for the past, I think 1 to 3 weeks, every single week there's economic data. So the next data that's coming out, a very big one, is actually the FOMC meeting that is happening on the 22nd of March. Okay, 22nd of March. There is the how high the Fed Jerome Powell will hike the interest rate. So let's head over to the link over here. I'll post the link in the comments. Tim, I already shared with you the answer, right? The options contract I mentioned already. So you can head over to this over here. Just head over here and you can read it, okay? Head over here and read it. Are you holding any signature banks contract over here? So I mentioned already, not over here. Is it over here? Yeah, so what happened, to all these options contract, most likely you get assigned and such, okay, you get assigned. All right, if I'm not mistaken, I just briefly read through the article over here. Okay, so most likely you get assigned over here. I do not have much experience on that because I have not encountered this kind of, the market collapse and I'm still holding the stock options. All right, so head over there. Okay, so the target rate, it is this. So in just 5 days, okay, next week. So previously, the Fed was actually anticipating a 50%, not 50%, 50 basis point, 0.5% hike. But right now, because of this, banking crisis saga, right? So it dropped, okay? So it dropped down, okay? So there is a 73% probability that it will hike 25 basis point, okay, and another 27% that there will be no hike at all. There will be no hike at all. So what do you think? Okay, what do you think? Is it 0 or 25? If you think it's 0%, just type 0. If you think it's 25 basis point, just type 25 basis point. So thank you, Philip, for your sharing. I'm not sure of the data, but I assume that this is correct. So yeah. So SVB and Signature are not the first bank to collapse. So no need to worry. Okay. All right. So no need to worry so much. Yeah. Thank you, Philip, for your your sharing, okay? Okay. Some say 25, some say 0. So personally, I feel that I think the Fed will still continue with their 25 basis point. This is just my personal view. To them, it's like this banking crisis, it's small thing now. Okay? You break things because the interest rate hike too fast, but let those fail. You let it fail, okay? But you'll continue to hike, okay? That's my personal opinion, okay? All right. So let's go through the Indices Outlook. Okay, I'll go through the March seasonals, internals, market breadth. Okay, and some of the low-hanging fruit that could be possible. Okay, that is pretty obvious. Okay, again, you'll see how's the price actions on the energy and the treasury bonds. So let's talk about looking at the March seasonal first. Okay, of course, right now, people are scared, when is the market going to recover and such. So this, I will share with you the seasonals right now for the market. Okay. So this is from Carson Research over here. Late March, okay, it's actually right now. So for the start of March, right, the market is actually doesn't perform that so well. But okay, after the 16th of March, right, the market tend to move higher generally. This is the S&P 500 index, the March return for the past 20 years. This is provided by Carson Research from Ryan Detrick from Twitter. So this is the seasonal. So again, it doesn't mean that you happen once again every single year, but generally, okay, based on historical data, we should see a higher price, okay, heading into the end of March. Okay, so this is the March seasonals. All right. So again, the Indices Outlook crypto. Okay, let's go through right now. The market is actually pretty weird today. So in fact, the crypto is up about 5%, about 6%. Ethereum is up about 3%, 2.55%. Okay, so let's go to the indices right now. Just purely from the price action, head over to my usual indicator over here. All right, over here. Moment. Where is it? Okay. So can you see that, this is the daily chart over here. All right. So can you see that, price starting to break below the cloud? Okay. And do you realize that, for the past few days, okay, even though the market indices are the index rally, or even though it doesn't feel like that, but the indices generally for the past 1 week, it went higher, okay, it went higher. But amid volatility, okay, intraday you see it's very ping pong all the way. Intraday it is very volatile. Suddenly, market up down. But towards the end of the closing for the past 2 days, it is actually pretty strong. So can you see that price actually, once price broke below the cloud and the central pivot range, okay, come here, retest again, okay. This level is at about 4,000 level, which is also the cloud resistance level, okay. This is the overhead supply market starting to feel a bit shaky. Once again, the market came down, okay. So what kind of expecting the market might come down today, okay, because hitting the very strong flat cloud resistance level over here, okay. And the Nasdaq, add in the cloud plus CPR, Facebook Live. Okay, can you see that? Okay, I add in the yearly pivot. Okay, yearly pivot. So can you see that? Okay, we have removed this, and this. Oops. Can you guys see that? The black dotted line here, it is actually the yearly pivot, yearly central pivot range. So this is a very big yearly central pivot range over here. The black dotted line. Can you see that price actually hit? Okay, you can see that price hit the yearly pivot. Ping pong come down. Okay, it's get supported at the yearly pivot. Okay, at the bottom range, and then hit the pivot point, yearly pivot, and then right now we are hitting the resistance once again. okay, hitting a resistance once again. So market, might again ping pong, coming down over here, acting with the yearly pivot. Okay, yeah. So getting the resistance level over here. So it's kind of expected there'll be some selling today. All right. So let me answer one question first. Will is asking if I'm to use intraday to look for wash and rinse to go in, what it is the time period to use. By the way, from the way you asked this question, I think you didn't attend Beanie's wash and rinse class, right? So, wash and rinse intraday, we can use 4 hour and day 1 hour time frame. I don't recommend going below 1 hour time frame because it can get very noisy and it doesn't really work that well. Okay, so 1 hour or 4 hour time frame. Okay, I hope that answer your question, Will. So any questions so far on the indices right now? So obviously, okay, right now it is not doing very well, especially for the Russell 2000. Okay, so I'll be trying to be as objective as possible. Right now, the price action is not looking good. It is not looking good. Okay, it is not looking good. Price is below the central pivot range, below the cloud, and below the yearly pivot. At least for the Russell 2000. Okay, so that once price go higher, there might be selling pressure, which is like what we are seeing the S&P 500 right now. When price starting to rebound higher, we will see some selling pressure, which is acting as the resistance level over here. Again, it doesn't mean that market will just come down like that. Okay, nobody knows what the market is doing. So, but overall, price action, it is not that strong. On the daily time frame, we are in a downtrend. Okay, and the market can just ping pong like for a few weeks. That's my anticipation. But the only thing that is keeping me bullish for the time being, which I think the market might go up, is actually the market internals right now. Why I think that we still have some hope left because of the VIX ratio that I'm going to share with you. Okay, so this is what I actually posted on Twitter as well. So I posted this. Anyway, do follow me on Twitter. Post the link in the comments. Posted the link in the comments over here. Yeah, can you see that over here? There's a big divergence between the VIX over VIX ratio and the indices SPY. Okay, call me stubborn. Okay, but I'm still bullish. The bulls will catch up. Don't fear. Wait and prepare. So far, this has never failed me since I started watching it last year. Again, of course, there's no certainty. It is all about probability. Okay, so I'm going to share with you this is the VIX ratio over here. All right. So for those who are new to MarketWise Asia, for those who don't know what it is VIX. Okay, VIX ratio, basically VIX. I'm sure you know VIX is the volatility of VIX, the VIX of VIX. Okay, again, there's some ratio thing in. Okay, all in all, it kind of move in tandem with the market. All right. So put in a naked chart, and this is the line chart over here. So this is the VIX over VIX ratio over here. So as per my previous, star signal, indeed, actually the star signal, I caught it at the bottom. It indeed went up, but okay, the index S&P 500 doesn't go up now. So I add in the SPY over here. Okay, oops, not this one. I put it below. Okay, SPY new pane over here. All right, so can you see that all in all, it kind of move in tandem with the VIX ratio, up, down, up, down, up, down, up, down, up, down, up, down. Okay, the movement is pretty much the same. But right now, we are showing a kind of a very serious divergence. Yeah, very big divergence, wide divergence. So while the VIX ratio, it is, heading up, okay, the indices is actually, coming down all the way. So there is this divergence. So, who is telling me the truth? Okay, which I suspect that, beneath the surface, okay, I think the market it is still okay, which my anticipation is that the VIX, no, the market will catch up eventually with the VIX. So, just show you previously in 2022, which I think I showed before over here previously, okay, can you see that, over here, all right, before 2022, before 2022, can you see the S&P, it is actually heading higher. The indices is heading higher, a high over here, higher high. But the VIX ratio is forming a lower low. So the VIX is telling you the truth, okay? The market internals, what's happening below the surface, it is actually not so good. Can you see that even though the market is heading higher, the VIX ratio is coming down. It is coming down. Okay, do you see? Right. So eventually, this led to the collapse in the 2022 or the correction. Okay, the market crash. So all the way down. All right. So this is the only thing that I think that it is keeping me so far bullish at the moment. Okay, just looking at the price action alone. All right. For example, the S&P, it is not looking bullish. Price action actually looks very, very weak, but it is actually keeping me bullish is this VIX ratio. Okay. All right. Okay, can you guys understand what I'm trying to say? So Darius is asking, given that the VIX has gone up so far, is it possible for it to come down and hence the market go down? Possible, but from my observation, empirical observation, it is normally, VIX is actually telling the truth, okay, which means that, eventually the VIX, as long as it is forming a higher high over here, the market, it is doing okay, and eventually it will catch up, okay, you'll catch up, all right. So if you understand what I'm trying to say, just type VVIX in the comments. Okay, the only thing that's keeping me with some hope that's bullish, okay, it is this VIX market internal. All right, and of course the market is already down quite a bit already. All right, the market it is down quite a bit. All right, so personally I won't be shorting it. Okay, but instead I'll be waiting for the opportunity to go long. Again, doing swing trading, you can go long, can go short. If you are shorting it and you are making money, okay, congratulations. Okay, I think you did very well. For those who are still don't know what to do, it is okay to step aside. Don't touch the market, okay, wait for better condition, okay, more clarity, then you enter the market. I think that is perfectly fine. Okay, so naked chart, okay. ES right now, okay, can. So let me type the VIX. Okay, VIX, not just the VIX, it is the VIX ratio. It's the VVIX over VIX. Okay, VVIX over VIX ratio. So VVIX over VIX ratio, right? So the fear, okay, the fear, it is at the bottom. It is at the bottom. Okay, it is at the bottom. Okay, the overbought complacent, it is actually at the top. It is actually at the top. Okay, it's actually at the top. Okay, so I hope that answer your question so far. All right, so let's take a look over here. Okay. Yes, so there are other, market indicators, not market indicator, I think the breadth indicator, okay, which I mentioned before. Okay, let's go through the ADR also. It is actually coming down, I think so. Okay, so let's go through the ES over here. Okay, make a chart and then put in the ADL, advanced decline line over here. Can you see that it also move in tandem with each other also? Trending down, actually it's trending down, is fine, like trending down because market is coming down, market is coming down, okay, market is coming down. So naturally, this is coming down as well. It is coming down. It's very natural. It moves in line with the market one. So market coming down, it is also coming down. So again, as I mentioned in my last Facebook Live, right, market there's two key very important things is that, market should hold on this two level, this swing low and this swing low over here. I mentioned last week, I mean, that for those who are new to me, you can go back to my Facebook Live last week and see it is the same thing that I share. Okay, I never flip data. Okay, it is still the same thing. Okay, so you can see that, this is the swing low. So can you see the price actually hit S&P 500 futures, hit the swing low over here and try the best to rebound back up again. So all in all, even though the market looks very, very bad in the recent week, in the past 1 to 2 weeks, it is actually, still okay. You understand what I'm saying? So, no, this swing low, it is not violated. It is still a higher low, okay? It is still a higher low here. For the main index, it is still a higher low. But underneath the surface, for example, like the equal weight S&P 500, okay? It is actually, below the swing low. This is RSP, the equal weight S&P 500. We are below the swing low, but market is trying hard to rebound at this swing low over here. So it hasn't really convincingly break below this swing low over here. Not yet. It is still trying its best to bounce back up again. So in all, let's look at the S&P. So it is still forming a higher low. So it is still struggling now. Even though struggling, price action not good, but it is still generally in a uptrend, just that albeit a very steep correction. Okay. Yeah. So Yang say ADR is coming down, but move sideways. Okay. Any questions so far on the market? Okay. I just want to repeat what I say. So just judging just based on price action alone, the market, it is actually not looking so good because price is below the central pivot range, below the cloud, okay? And right now we're hitting a resistance for the S&P 500. It is not looking so good. There's a possibility, price can just come down again, okay, and retest the low once again. So market can do like that, market can do like that, okay? Down, retest the low again and go back up again. Okay? So, if you don't know what to do, keep it light. So for me, I have been keeping light also, even though I started to enter, a few positions, okay, not aggressive, a few positions, like the KRE, which I mentioned actually last week, right? I actually entered into KRE. So right now it is still in some losses. I'm still holding it, okay? It hasn't hit my stop loss level yet. Jaw is saying, yeah, Ken, yeah, I think it's a very apt way to say it is in an ICU now, okay? It's like last line of defense trying to keep it in an uptrend, okay? Ken, all right, so this is, market breadth, okay? I forget to talk market breadth. So market breadth, I mentioned last week also, the market breadth, we are actually, at a pretty low level. So this is the S&P 500 above the 50 days moving average, okay? Naked chart, okay? So about 23%, it is above the 50 days moving average, okay? All right, starting to bounce up a little bit again, but this is not the key thing. This is the S&P 500. I'm looking at individual industry, individual sector. So can you see that this, energy stock, we are also hitting right smack at the bottom, at the absolute low. How many stock can go below 50 days? As in, how many stock can be below 50 days? 0%, okay? 0%. So this is right now, it's like 4%. So it's almost zero. So energy is actually not looking very good. And then, okay, certain things like last week I mentioned that the utilities, right? Based on seasonals, is actually looking pretty good, and the consumer staple. So utilities is actually, what's the utility? It's actually, can you see utility? It actually, after hit the low over here, it actually rebounded back up. So this is the XLU over here. XLU utilities. Can you see that it is still pretty strong? The utilities is actually moving higher. All right. So there is this thing here. I spot a lower low that seems newly forming. Is that a concern as well for which one? For which one? For S&P 500? Is it for S&P 500 or what thing? Okay. All right. Again, the way that we read the market can be a bit subjective. Okay. So for me, yeah, I'm still gravitating towards the bullish side, but it is hanging there on a track. Okay, hanging there on a track. S&P 500, I mean the spot indices. Oh, for lower high, okay, S&P, yeah. You mean this S&P 500, this lower high? You mean this one? Yeah. To me, the way I read is that as long as the market don't break, as long as the market don't break this low over here, okay, I think we are still okay. My concern is the lower low, not the higher at the high, not the higher high, or the lower high, okay, or not the lower high. Okay, even whether it's futures or S&P spot index, it is almost the same now. Okay, yeah, as long as the price don't break below this low over here. So I'm not so concerned about the lower high over here. Okay, okay, my personal view lah, my personal view. All right, so the back to the market graph again. Okay, market graph over here. So this could be the lowest hanging fruit. Okay, that is the energy. Okay, the energy stock. Right now we are at the right smack at the low over here. So just share with you, okay, for the based on seasonals, XLE energy, XLE. Even though right now you can see the XLE. Okay, let's go back to the chart again. XLE. It's like, wow, very scary, not looking good, like XLE. Okay, wow, all the way down, okay, all the way down. But we are heading into a month that could be favoring, XLE that has a tailwind, because seasonal it is favoring us. So for XLE, 27th of March, okay, to the 14th of April, okay, for the past 10 years, 90% of the time, it is actually positive. So can you see that for XLE over here? I'm using a stock chart. So XLE. So can you see that based on seasonal data over here, okay, even though it's coming down, XLE coming down, we are approaching the seasonal data over here where, from April until June, okay, it is a very bullish month for the energy sector. So you might want to, put it in your watch list and observe closely, okay? So XLE is one, okay? XLE is one, okay? And by the way, for the commodities are DBC. This is the DBC commodities index tracking. This is the ETF over here. All right. It is actually has a star signal already. There's a star signal for the DBC. I think, if I'm not mistaken, there's a star signal. So, potentially, okay, there could be a reversal, which is in line, okay, with, okay, what I mentioned about the seasonals for the energy sector as well, because, these are DB commodity index. I think bulk of it is in the energy kind of composition, like heating oil, natural gas and such. All right, so keep it in your watch list. Another one, okay, we have a short period of time. It is this window of period is actually the long-term treasury bonds, the TLT. Okay, so from 22nd of March, okay, until the 7th of April, for the past 11 years, 91% of the time, it is actually positive, which means that out of the past 11 years, okay, 10 years is actually positive, okay, for the TLT. Oh, by the way, as I mentioned, I already exited my TLT. So, I'm not sure about you. So previously I mentioned about this TLT over here. No, over here, right? So I posted this on the 4th of March. There was a star signal over here. All right. Okay, price could just rally higher. So indeed, I had a position with TLT. I already exited this TLT at the somewhere near the open of this market over here. So I don't have a long position right now, but you want to see that right now the price of bond is heading higher. Price of bond is heading higher, which means you don't need to know that it has an inverse relationship with the yield. Okay, when bond price is heading higher, the yield it is going lower. Yield is going lower, which means that right now there is this either it's a flight to safety, people are rushing to bonds again, or the market is anticipating that in the near future, the Federal Reserve will not hike interest rate so much, or in fact, it could even come down. So can you see that this is a bond price at 20 years, right? So you can see that the 30 years yield, is actually coming down. It has an inverse relationship. The 10-year yield, it is actually coming down as well. 2-year yield, coming down as well. Right? The market is kind of anticipating that the yield is going to come down. So again, we have a short period of time. So if you look at this TLT over here, right? So this TLT, 20 years plus treasury bonds over here. Okay, so we have this short window period, over here that it can go up. So until somewhere the early start of April or so, that it might continue to go higher. All right. And of course, previously I was anticipating that because of the price increase of the bond price go up higher, it could relieve the pressure of the stock market, and the stock market might go up, but it didn't happen. So right now the bonds, right now it's more acting like a flight to safety kind of asset class. Okay, I think I talked a lot already. Can you understand what I'm trying to say or not? If you understand what I'm trying to say, just type yes in the comments. Just type yes in the comments. So as I mentioned, right, I actually entered into KRE also over here. Mentioned last week, there was a star signal over here. So I'm still in a position, it kind of ping pong now. So again, I'm not sure whether price will do a V-shaped recovery or it will do a double bottom kind of W formation and then go back again. So we shall see how it goes. Again, I'm not sure whether this session can really help you or not, because right now market is quite volatile. I don't have a lot of long position, so I'm kind of staying at the sideline right now. The only good thing out of this whole saga, this thing is actually cryptocurrency. cryptocurrency. All right, so yeah, cryptocurrency over here. Price today is up about 6%. All right. And I think I mentioned before, right? So I am trading for a crypto firm as well. So trading at a institutional level. I actually exited my crypto Bitcoin long just now. So the reason why I actually exited, so this is more of a swing trade or position trade. I have a target in mind. Now I can say my entry price. My entry price is somewhere around 20K, about 20K. About 20K. So I held on until about near to 27,000. The reason why I decided to exit it is because its price had actually hit the yearly central pivot range over here. All right. Can you see over here? This is the yearly pivot. Can you see? It is touching here. Let's zoom down to maybe 30 minutes. 30-minute time frame, can you see price hit the yearly pivot, come hit there, did a false breakout a little bit and then come back down again. So again, I don't know how high Bitcoin can go, but generally, okay, crypto class is a risk-on asset class, and a lot of time, crypto actually lead the equities market. So which means that if the crypto generally is heading higher, okay, the equities, the stock market generally is okay as well. Just need time for it to catch up with the crypto market. All right. Tracy is asking, can you teach us crypto too? Actually, nothing to teach lah. It's exactly how I read the market also using the same thing. Nothing has changed. Central pivot range, cloud support, and all this stuff. So yeah. So and I think I mentioned before the reason why I entered Bitcoin previously is because of this false breakout over here. All right, so at the point, this is the weekly time frame of crypto. All right, so at the time, somewhere around late October, people were very, very bearish on crypto, very, very bearish. So this was kind of the support area. You can see this swing low over here. People were expecting price, once price broke down over here. Can you see this big candle or not? So this was the swing low. Okay, price broke below this swing low and close below there. Okay, price close below this 17,600 level. Okay, I think at that point in time, a lot of people on Twitter were expecting price to go down lower. Okay, but the issue is price cannot go down lower. Ping pong cannot go down lower leh. So and then suddenly price just reversed back up. So once again, when the consensus, the masses think that something is going to happen, but it didn't happen, most likely the reverse will happen. Can you understand what I'm trying to say? So people expecting price to come down and go lower, but it didn't happen. It reversed back up. So it is going to go up higher. So at the point in time, I went in at somewhere at about here. Okay, at about 20K. So I went in about here. All right. So I just, hold on to it until about 27,000. Yeah. So I exited my crypto long. I think pretty decent profit lah. Okay. I think pretty decent for the amount of time that I'm holding. So I also have an Ethereum, but I'm still holding on to Ether. So yeah, so this is basically on cryptocurrency. So all in all, crypto, it is still doing pretty okay, which lead me to think that the equities market, it is still okay lah. Okay, it is actually still okay, not that bad. All right, any question so far? Okay, any question? All right, so yeah, crypto hit the yearly pivot. So I think I'm quite pleased with this trade. So this crypto trade over here. So again, I also talk about crypto. All right, crypto. Let me see, crypto BTC. Did I mentioned something previously. I can't find anymore, but never mind. Okay. Let me try to search. I think cannot find, quite some time away already. Let me try again. Can find or not for crypto? Okay, cannot find. Never mind. So what's your TP for Ethereum? TP for Ethereum, I don't have a target right now. So generally, I'm more bullish on Ethereum than on Bitcoin. So if you add in the usual key level over here, okay, all right. I might exit when price hit the yearly pivot, which is at about, okay, about 19,090 lah, okay, at about 19,000, no, not 1990, okay, about 1990. So that is my TP target for Ethereum. So I'm expecting if really price can hit there, I'm expecting there's a reaction to come down. But of course, right now Bitcoin has already hit the yearly pivot, so the Ethereum might follow suit as well. So I'm not sure, but anyway, I'll just trail my profit hopefully. Okay, all right. So what must happen in the US index for you to become more bullish? So there is asking on that. Again, I think for me, it is the price action must show that. The price action must show that, okay? Must show that. So underneath the surface, the market breadth, all this must also kind of show better health of the stock market and such, okay? All right, so yeah, so all in all, it must move higher lah. It must move higher lah. Okay, it must move higher. Okay, and go above the cloud. First thing, go above the cloud. Okay, can preferably go above the cloud. Okay, come back, test support, and then continue to go higher eventually. That's the price action basis. Plus the market breadth that should improve. Okay, that should improve. All right. So CA, Alex, if you were given an opportunity to reevaluate your portfolio in Euro debt crisis, what would be your decision again instead of selling off all stock? If I could turn back in time, I would just hold on to my stock, okay, and do nothing. Again, this is based on hindsight lah. Again, you can see that if I do nothing, I can just ride all the way up. Okay, at the point in time, the way as in the money that I invested 11 years ago, considering that the income that I had, okay, and the savings that I had, it is quite a big sum. About 13 years ago, it's quite a big sum. Okay, at the time I was still a newbie, just graduated from the university not too long ago. Yeah, it was quite a big sum. So if I knew that, with the experience that I have, I would not do anything, just hold on to it. Yeah, eventually you just return. So again, yeah, I mentioned, right, it is just a mosquito lah, keep buzzing you, but it won't die lah. So it is the same as this crisis right now, banking crisis, the bank collapse, keep buzzing you, but you won't die lah. The market won't die lah. The Fed will come to rescue and such lah. Okay. I hope that answer your question for Dennis, for Darius, okay, and for CA as well. So we are right now into the 1 hour and 10 minutes mark. Okay. Any other question before I call it a day? I can still entertain and try to answer a few more questions. Okay. But somehow I have a feeling that the market will recover towards the end of the day. Because for the past few days, okay, I have been, looking at the market, towards the end of the day, end of the session, it closes quite strongly. You go up, okay. So these are a subtle clue that, okay, there are some, hidden buying towards the end of the day. All right. So Ted is asking about gold. Gold is actually, I think not so good. Okay, gold, even though right now, gold is actually showing a very good price action right now. Gold actually, very strong. But I think the upside is limited now. You want to enter gold. At the point in time, I was contemplating wanted to buy somewhere around here, okay, but I didn't enter. After that, price just shrunk all the way. So right now, gold is hitting near the prior classical resistance level. So no, I think if you're talking about swing trade holding for a few days to a few weeks, I think the risk to reward, it is actually not really there. Okay, it is not there. Price up a lot already there. Okay, up about 10%, 8+% already there. Okay, will it move higher based on seasonal data? I think it is also not favoring you as well. So let me take a look at gold. Okay, Okay lah, kind of ping pong is exactly, I think don't have an age, kind of ping pong up, but generally, yeah, it should go up until mid-April, but judging from price action right now, I won't be going long. There's no trigger for me to go long. Yeah, no trigger. I always wanted to wait for a pullback. Okay, I need price as an impulse move. I need to wait for a pullback. Okay, before I enter. So there need to be a pullback. So I won't be entering gold, even though it might continue to head higher. But given the risk to reward, it is actually heading up. Today is up about 2%. It's not really there. Okay. So despite your half bearish stand, it is still good to go long today. I won't be going long today. I'm staying out. I have, I think about two long position. It is still holding, so I won't be going long. I'm not going to get too aggressive. So just stay with me. I won't be going long. Just let it be. All right. So Cynthia, I think I hope that answer your question. So Yi Yang is now a professional trader now. Go run away. I took half profit yesterday. Yi Yang is getting better and better. Okay, fantastic. All right. So with that, all in all, so a very quick summary. Okay, I think 1 hour 15 minutes ready. So yeah, I absolutely it is not doing very well. It's kind of a bearish market right now. It is a bearish market, no doubt, but the thing that is, it could be like that or ping pong, wearing you out. Okay, all right. The only thing that's keeping me kind of bullish is because of the VIX ratio over here. Okay, today is actually right now is positive. Okay, VIX ratio is positive and it is heading higher. That's a divergence. So beneath the surface, things might not be as bad as it seems, but it is still very difficult. Okay, to time the entry. So if you don't know what you're doing, okay, if you think the market is too volatile, okay, then stay out. Okay, it is okay not to trade. Wait for a better condition, then you enter. Right. For those who are more okay to take risk one, or you have a lot of buffer, okay, then go ahead and do some long if you want to. Okay, I hope that answer some of the questions for today. Okay, so so once again, if you find value in today's sharing, okay, just type value in the comments. I really appreciate if you can give me a like, share, or comment. Liking is very important. It helps Facebook and also YouTube, okay, to let other people know. So once again, I urge you guys to follow our social media channel over here. And if you're watching on YouTube, please subscribe to our channel. Very simple one. Market-wise Asia, that there, you can just click on the subscribe button. Just click on the subscribe button. Okay, can give me a like, share, or comments. Okay, let other people know about Market-wise Asia, or if other friends wanting to have some market clarity, let them know that there's this gentleman Alex every Friday evening. He's doing Facebook Live to help out to give you some clarity of the market. Okay, so give me a like, share, or comment. Okay, okay, thank you, Hadley. You always give me very good response. Thank you for your support. Okay, thank you so much. Okay, once again, I hope you guys enjoyed the sharing today. All right, so thank you for today. Thank you for staying with me until tonight. So with that, I will end the session right now. So do register for Asia Trading Festival. Okay, register for this event. It is totally free. Once again, have a good night, good evening, and I will see you guys again next week. Thank you so much and bye-bye.